And so I think that as these hubs grow, that's healthy for the Bitcoin network. You don't want all the Bitcoins to be in one big BlackRock ETF. You want to see the Bitcoins kind of spread around to all these different jurisdictions, all these different countries. The thing that kind of makes me most optimistic is when I go to these conferences. I was talking to a woman from Saudi Arabia. I was talking to a man from Bolivia, another man from Colombia. There's a whole group from Bulgaria, someone from Australia, someone from Malaysia, a bunch of people, of course, from the US and every part of Europe. Many people from Africa, people from the Middle East, and just everyone's here kind of in the same sort of shared vision.
Lyn Alden is a well-known financial analyst and investment strategist who is known for her insightful study on Bitcoin. She was recently interviewed by Alex Jordav, and they talked about energy and Bitcoin's chances of being adopted, among other things. Based on what Lyn Alden, Bitcoin is self-depository digital currency that can be used anywhere in the world and can't be censored. It has the potential to become one of the world's largest money systems. She thinks that Bitcoin's security and network effects make it a good choice for people and businesses that want to send large amounts of money across borders. Alden also says that Bitcoin's instability is an important part of its growth because it lets it go up and be used by more people. She judges the Bitcoin network's health by how liquid its prices are and by how the network works, such as the growth of global hubs where Bitcoin fans are starting businesses and groups. Alden is positive about Bitcoin's future because there are many people from different countries and areas who want a decentralized monetary system. She thinks that as these hubs grow, Bitcoin will grow into a multi-trillion-dollar network that is bigger than any single stock. Watch interview clips to learn more about Lyn Alden's talk with Alexei Jorgadov. Please like this video, subscribe to the channel, and turn on post notifications to get more videos like this.
Yeah, to summarize, Bitcoin is globally portable, censorship-resistant, self-custodial money. At least if you have the option to self-custody it. And even compared to other cryptocurrencies, it's the biggest, most liquid, most secure one. So if you want to send $1 billion, overseas, Bitcoin is the one that can handle that kind of volume. And then there's network effects associated with that. The bigger it is, the more liquid it is, the more secure it becomes, which then makes people want to own it even more. And so price is an important indicator of adoption. It doesn't matter what happens on a 1, 2, 3 year basis, but certainly over, say, rolling 4-year periods, you want to see higher highs and higher lows in Bitcoin because that shows that adoption is happening. And like you said, volatility is important because what you want when an asset is small is you want upside volatility. You can't go from Bitcoin currently is worth about $1 trillion market cap, a little bit above that. And it went from 0 to $1 trillion in, something like the first 12 years it hit $1 trillion, then it was in a bear market. Now it's back to $1 trillion. You can't get that without upside volatility. And with upside volatility comes leverage and comes over-enthusement for a period of time. And that's what creates periods of downside volatility. So it can't get to whatever its total addressable market is without both directions of volatility. Now, once Bitcoin gets closer to whatever its total addressable market is, so for example, you think, what percentage of your liquid net worth do you want in a portable, like a globally portable, self-custodial, peer-to-peer money, like the best one? Probably a pretty significant percentage of like a liquid net worth. And right now, very small percentage of people even own any. The people that own some usually have a small percentage. And so I think it's still climbing in terms of its total adoption. I think eventually it's a multi-trillion-dollar network. I think it'll be bigger than any individual stock. And so until it's at that kind of higher mature phase, I think the volatility is going to be present. And as far as the overall Bitcoin, kind of the health of the Bitcoin network, one of the biggest ways I measure it, one is price and liquidity, but also it's kind of the network effect of the people involved. So all the different hubs that pop up. One of the first ones was Bitcoin Beach in El Salvador, and they eventually inspired the whole nation to kind of adopt it, or at least at the president level, and kind of slowly put it out to the rest of the country. Then we've seen, for example, Bitcoin Jungle in Costa Rica, Bitcoin Ikasi in South Africa. There's all these different hubs popping up, and we're in a hub right now, which is Bitcoin Atlantis. It's a good name because you're in an island, Madeira,
I love it,
in the middle of the Atlantic Ocean. But what happened was a few years ago, a bunch of Bitcoin enthusiasts really kind of focused on this jurisdiction and said, let's create a little bit of a Bitcoin density here. That's what we're seeing play out now. That now, compared to a few years ago, from people that have been here during that time, a lot more merchants accept it. A lot more people hold it than they did a few years ago. And that's what you see in these different little hubs around the world. And so I think that as these hubs grow, that's healthy for the Bitcoin network. You don't want all the Bitcoins to be in one big BlackRock ETF. You want to see the Bitcoins kind of spread around to all these different jurisdictions, all these different countries. The thing that kind of makes me most optimistic is when I go to these conferences. I was talking to a woman from Saudi Arabia. I was talking to a man from Bolivia, another man from Colombia. There's a whole group from Bulgaria, someone from Australia, someone from Malaysia, a bunch of people, of course, from the U.S. and every part of Europe. Many people from Africa, people from the Middle East, and just everyone's here kind of in the same sort of shared vision. And then a lot of them go back and they're building stuff at home. They're building communities, they're building companies, and that's part of the network effect. That's part of what makes it eventually get up there as being one of the biggest monetary systems in the world.
Based on what Lyn Alden Bitcoin is a worldwide, self-custodial currency that can't be censored and has a lot of potential. She thinks that volatility is necessary for growth and plans to build a multi-trillion-dollar network with backing from many countries. Alden says that many people believe false things about energy. He knows about the inefficiencies of the energy system because he is an electrical engineer. She stressed that energy can't be easily and cheaply moved from one place to another, and that it can't be changed into other forms. More energy is lost in long-distance transportation than in production. Alden also said that the grid has to constantly balance supply and demand, which can be hard because demand changes throughout the day and with the seasons. Allen stressed that wasted energy is any extra energy that is not used, and that this squandered energy is many times greater than the energy used by the entire Bitcoin network. Alden used natural gas flaring as an example. The gas is burned and pollutes the environment, but no money is made from it. On the other hand, Bitcoin miners can use this energy to run their businesses, making a little money and having less of an impact on the environment. Alden says that the World Bank estimates that the amount of natural gas flared each year is 8 times greater than the energy used by Bitcoin. Alden also said that there are many ways to use extra energy, like hydroelectric power that isn't being used. In developing countries, it can be expensive to build energy infrastructure, but mining Bitcoins can help use more energy and cut down on waste. Let's go back to the conversation.
I think it's partially decoupling, but I also think that, we've seen this with gold as well. It held up a lot better than you'd expect based on the positive real interest rates and the shrinkage of the balance sheet. I think basically a lot of things behaved as you'd expect in 2022. That's when net liquidity was falling quite a bit. Asset prices across the board were pretty much falling. But what started to happen towards the end of that year and into 2023 is that even though the Fed was trying to be tight, they were no longer being as tight as they expected because of the fiscal dominance we just talked about. Money was coming out of the reverse repo facility and back into the broad money supply, even though they're trying to be tight. And so most measures of liquidity have been up since then, even though they've continued holding interest rates high and they've continued reducing their own balance sheet. Other measures of liquidity are coming in. And so you see stocks up, you see Bitcoin up, you see gold, still like holding its own. Real estate, it corrected a little bit and is back up to its highs in the United States on average, at least outside of the bubbly cities. Like you look at the nationwide average, it's kind of back up to the highs. And I think it's in large part because it's very hard for the Fed to tighten when public debt is this high and when any tightening they do adds to so much interest expense, which ironically is stimulative. It's fiscal deficits pouring into the economy. It's very hard to have a recession when you're running $2 trillion deficits. You're pre-stimulating before the recession even arrives. And of course, that comes with consequences. That, we risk having a second inflation wave. We risk furthering, asset prices going up faster than wages, keeping people locked out of the housing market, locked out of, the stock market. And so I think that that's still a thing that it's going through. But I think more and more institutions and large entities are kind of realizing the long-term fiscal problem. And they're saying, I'm not going to hold Bitcoin just as a zero interest rate play. I'm going to hold it because I don't see any way that the U.S. government's not going to inflate their way out of this. And so you see people holding Bitcoin and buying Bitcoin despite the fact that interest rates are over 5%. And careful to talk about what they don't know. So for example, for many tech stocks, he'd say, look, it's just outside of my scope. I'm not going to invest in it. He wouldn't trash talk the asset. Whereas with Bitcoin, he'll criticize it, objectively call it a bad investment. Like he's saying it's not just me. He's saying that is a bad asset. It's a toxic asset. It's rat poison squared. So he's claiming to understand it, and being wrong for a decade.
Maybe because he just FOMO'd into that.
Yeah, so it's funny. His father was into gold, and Buffett's investing career lined up in an era where just owning stocks was the way to go for a very long time. His business partner Munger was also very critical of Bitcoin, and it's funny because I think it's because he actually understands it. He would rarely describe it as a bad investment. Instead, he would describe it as evil.
Bitcoin traders expect a price recovery. Discovery as the cryptocurrency reached 6-week highs after a 12% weekly increase. Bitcoin's momentum suggests it may achieve all-time highs due to market dynamics. As of the current statistics, Bitcoin has reached $68, for its best level since June 12th, and is 7.75% shy of highs. Recent news of US President Joe Biden not seeking re-election boosted market optimism. Popular trading bias underlined the importance of keeping $65,000 as support on higher time frames to retain bullish control. Institutional investor interest is fueling demand. Market characteristics like profit-taking could alter prices, and unforeseen geopolitical occurrences could disrupt Bitcoin's trajectory, may cause volatility and inflation. Financial markets and crypto continue to be affected by trends. Bitcoin is challenging prior all-time highs as support, indicating a favorable long-term outlook, although daily price fluctuations around important resistance zones might swiftly change. Market mood analyst Don Crypto Trades suggested watching Fibonacci extension levels if Bitcoin breaks higher. Bitcoin miners usually enjoy big price gains after surrender. This development fosters optimism. Market optimism and rising movement. Recent Bitcoin performance and the larger market conditions suggest Bitcoin might reach $70,000 to $80,000 if present support levels hold, but traders and investors should stay cautious. As we conclude, watch market indicators and geopolitical factors that may affect Bitcoin's price. Do you agree with Lyn Alden on Bitcoin adoption? Is Bitcoin mining energy efficient? Leave your thoughts in the comments below, share this video, and hit the like button. Thanks for watching, and don't forget to subscribe.